Hello, hello everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I had a little bit of audio technical issues right there, but I'm very, very grateful and glad that we are back online. Okay, so today is Thursday as we begin the second half of the new week. As usual, let's run through our daily routine just to quickly confirm that you can see my screen and you can hear my voice loud and clear without distortion. So please, I would like to see your feedbacks in the comment section. If you can see my screen and you can hear my voice loud and clear, please give me some feedbacks. Give me a hi or a good morning, whatever it is you can drop in there so that I can confirm that we are on the same page. Well, I see a couple of comments here, a handful of comments. Thank you, Carrie, for holding down for me there. I'm very glad that we are back on. I see you, Lako. Good morning to you, Lako. How are you doing today? I see you, Cannabis. Trust you're doing very well. Panel you 621. Glad to have you around with us this morning. I see you, Alligator. Good morning to you. So let's confirm. Do we have any more feedbacks in the comments section? Do we still have people on board? I know we have them. Kindly give me a feedback. Give me a hi, and let's get this party started. Thank you very much, guys, as you do so. Okay. So let's see what we have here. Okay, thank you very much, Cannabis. Thank you. Who else is here again? Okay, I can see EDC. Thank you very much, EDC. Thank you very much, 9660569. Thank you. All right. Hello, Ricky J. I can see Ricky J is about to come in. Hello, Ricky. How are you doing today? Glad to have you around with us this morning. So I think with this handful of feedback, we shall be taking this as a confirmation that we are all on the same page. And in that regard, let's move on to the next asset. Moving to the our analysis for today. 966 says voice is double. Really? Okay, so let's try and see what we can do about that. I do not understand what you mean by double. Please, can anyone else confirm to me in the comment section if it is on its own hand too as well? Do we have a similar scenario with anyone else in the house? Please let me know. I will be looking forward to that while I do the necessary adjustment here. Okay, so in the absence of no other, I welcome you once again to another promising edition on the Extreme Speed Live Technical Analysis session. My own name is Sharif Daramola, and for the next 1 hour thereabout, I'm going to be your host, and I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And so far this week, we have been monitoring 4 financial instruments, which includes the USOILSPOT, the USTech100, which is popularly known as the NASDAQ. We also have the USDJPY, and finally, my favorite asset amongst them all, the XAUUSD, popularly known as the gold spot. And so far this week, we've done fairly well, very well on all these assets, as we had some significant amount of profit across board, except for the USDJPY. It's still going through a choppy market condition, which obviously is as a result of the anticipation of the GDP and the core personal consumption expenditure, which is coming up tomorrow. So today we are going to be looking at the structures, reviewing the current market conditions with the utmost intent of identifying potential trading opportunities as we prepare for the New York session. So ahead of today, I've already done a top-down analysis, a comprehensive analysis on all of these assets, and I'm very excited to share with you my recent ideas, which are simple enough for us to manage our existing position. So I encourage us all not to stay tuned in so that you do not miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, wondering what is going on here, well, you're very much welcome on board. And as technical traders, we usually gather here every day, coming together as a community to engage in follow-ups and reviews of our current trading positions. The session kickstarts 10 a.m. UTC, 11 a.m. West African time, and my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Trust me, the more time you spend with us, the better you will become at comprehending our analytical approach, utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I do extend a warm welcome to you and encourage you to actively engage in the comment section. So I see some comments here in the comment box. I can see Word 2030. It says, hi, can I talk with Shreddy? Okay. Sometimes it crashes. Can I keep in touch? Okay, well, I'm not sure I understand what that means or how relevant that is to what we are doing here this morning. But in that bit said here, let's just dive right into the business. So as usual, our first exercise on a daily basis is to keep tabs with the economic calendar to try and see what market participant will be looking forward to today to guide their trading decisions. And of course, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, so far this week, and based on the asset we are monitoring, we have come across quite a lot of events for this week, which has in one way or the other affected the sentiment in the market, though we were yet to get a high impactful event for this week. Now, for today, Thursday, March 28th, we will be looking at our first high impactful event, which is coming up in about how many hours from now? That's about 2 to 3 hours from now, which is the gross domestic product annualized for quarter 4, coming in from the United States economic docket. Now, for those of us who do not know, the GDP is a key economic indicator representing the annualized percentage change in the U.S. economic performance, here representing the total value of all goods and services produced within the borders of the United States. Now, the anticipation of this event can significantly impact market sentiment as it provides a comprehensive view of economic health and growth. So, a higher than expected GDP growth often strengthens market confidence, leading to positive price action and potentially influencing the Fed's decision on interest rates. Now, if we look at the previous data, that is for the previous quarter, we have a 3.2% expansion, and based on what is on ground, economists are projecting a 3.2% expansion again. So it still gives us an insight into how resilient the US economy is compared with what we saw from the United Kingdom this morning. They recorded another contraction in that regard, and this may likely continue to influence the idea of interest rate being kept higher for a keep higher for a longer period of time. So we look forward to see what the actual data will be on that one. So I encourage us all to mark out the timing on that one so that we can be on standby to capitalize on any opportunities there. Then we simultaneously we are going to be looking at the initial jobless claims. Though this is not a high impactful event, it's a mid-tier economic features, but I think we should include it into our watch list for today. The initial jobless claims is released by the Department of Labor, and it measures the number of people filing first-time claims for state unemployment insurance. So a larger than expected number is going to be indicating weakness in the United States labor market, which obviously could have a negative impact on the US dollar. Now, if we look at the previous data for the month of February, it came in at 210,000, and economists are projecting a 215,000 for the month of March, which is not a promising figure at all. So we'll look forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? Then another event we will be looking forward to today is the Consumer Sentiment Index, which is considered to be another impactful event that everyone will be looking forward to. And the reason why that is simply because of the data that it presents to us. Now, in the data, we will be able to gauge the prevailing sentiment and confidence levels among consumers, which will definitely provide valuable insights into potential shifts in economic conditions. So, changes in consumer sentiment can influence spending pattern, impacting various sectors and markets. So, we look forward to see what the data will be on that one. Market is expecting a 76.5, just as it did for the month of February. So let's see what the actual data will be. So this is coming up in about 3 hours from now. So we want to be keeping that timing right when it happens. Then moving into the Japanese economic docket, we have another high impactful event coming in as the CPI data, which is known as the Consumer Price Index. Now, this is a measure that examines the average change in prices paid by consumers for goods and services in the last 1 month. A higher than expected CPI can lead to concerns about inflation impacting market sentiment, as it may prompt expectations of tighter monetary policy to control rising prices. So we'll look forward to this one. And from what we have here, the previous month came in at 3.1%, though we are yet to have the previous month came in at 2.16% for the core price index and 3.1% for the one excluding fresh foods. So we do not have a projection yet, but I think this usually comes in about an hour or two before the event happens. So this event is going to be coming up in about 12 hours from now. So we do want to anticipate how the market is planning for this event, and obviously how it's going to be reacting to this event when the event finally comes in. So we are going to be looking at all of this and taking all of this into consideration while we review the current market structure. And of course, as technical traders, we do understand that the anticipation of this event has a way of influencing the behavioral patterns of market participants in this environment, hereby resulting into price action movement. And that is what we are going to be looking at today, and see how we can position for the next move. So with that being said, here we shall be diving right into the business. And as usual, the first asset we will be looking at this morning is going to be the USOILSPOT. And so far this week, we've done pretty well on this asset, as we've capitalized on both buying, selling, and lately we also had another buy position triggered during yesterday's trading session. And for educational purposes and the sake of those who missed out on our our editions, earlier editions from Monday to Wednesday, let's run through what really happened at the beginning of the week that led to the decisions we made. So at the beginning of the week, remember we had our key level, which was duly cited around the $81 area, due to the fact that this zone had played a major role in determining the direction of price action in the last couple of months. Now, for the sake of clarity, let's look at the 4 hours time frame together and see how important the $81 level is. Now, remember here on the 4 hours time frame, we did observe that price action was finding higher highs and higher lows after considering the character of price action since the beginning of this month. And to emphasize the strength of the buyers, we have a couple of ascending trend line in place, as you will see here. And you know how we use our ascending trend lines. As long as price remains above our ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying that asset. Now, with the situation we have here, we had another level which we were supposed to use to guide our trading activities for this week, and that is the $81 area. Now, this level here had played a major role in determining the direction of price action in the last couple of weeks. As you will see here, I think during the second week of this month, this area was a strong selling niche. Then we saw price break out of the structure, retested it the second time here, then price broke down again, and we saw that area served as a selling niche for a while before it was broken again during the first day of this week to trigger that first buy position we took. Now price action was back into the structure, climbed above it again, lining up with that ascending trend line, which further emphasized the strength of the buyers in this market. And you know how we use our key levels in this community. As long as price action remains above our key level, which in this case is the $81 level, we want to be looking out for patterns and structures that supports the idea of buying the asset. Now, with this simple idea we have on the 1 hour time frame, so we scale down into the 1 hour time frame where at the beginning of the week, we saw our price action was oscillating around our key level at the $81 area to form a range bound structure where price was confined within the $81.13 level and the $80.70 area to emphasize the prevailing uncertainty in this market during the first 10 to 12 hours of this week. And usually whenever we have this kind of range bound structure, we want to exercise patience and wait for price action to either break down the support line of that range to give us an opportunity to sell, or the breakout of the resistant line of that range to give us an opportunity to buy. And during our live session on Monday, considering the fact that price action was trading above our key level, we were looking out for buying opportunities at these two levels, the $81.13 area and the $81 level. So we had our first buy position triggered there. Then we added more positions at the break out of the $81.70 level. And of course, I did mention that we move all stop losses to secure that current buy position at that time. After moving our stop losses, we were taking out with some profit, I think over 150 pips from 3 buy positions on that one. So as of the second day of the week, we were doing very well on this asset. And during our live session on Tuesday, I did emphasize here that we may likely be seeing a retracement move of that impulsive leg that started this week. Now, what I said here is that if you look at the structure, you will see that price action was finding selling pressure as soon as it got into the $82.25 level, and subsequent attempts reveals that buyers are while losing that momentum, resulting into some series of lower highs. And we did mention here that if price action drops below the 81.70 cent area, we may likely be seeing a bearish move to the downside, and that I wouldn't be selling unless the key level at the $81 area is broken to the downside. So we had a sell position triggered here yesterday on Tuesday, though the move did not last long as we saw price come back into the entry point. Now, during our live session yesterday, we were around and below that $81 area, and I was of the opinion that price retesting the $80.70 level will welcome buy positions for us, considering the fact that price action was sitting above our ascending trend line. Remember, the ascending trend line we identified on the 4 hours time frame, which is right here. And you know that as long as price remains above the ascending trend line, we want to be considering buying. So we bought again at the $80.70 level, added more positions at the breakout of the $81 area, and as at this point we are having 2 buy positions active, running into about how many pips now? About 120 pips thereabout. And for those of us who capitalized on this opportunity, well done and kudos to you. So as it is right now, it is appropriate that we move all our stop losses to secure the current buy position as we begin to notice some bearish pressure resume around that $81.70 level. Now, one interesting thing about the $81.70 level is the fact that it also shares a confluence with this descending trend line following price action hitting that new high at the $83 area. Now, due to this, we have due to the series of lower highs, we have this descending trend line, which will be serving as a yardstick to guide our trading decisions for today. So if the continued selling pressure happens around this area, we may likely be seeing price action drop to the downside. And in fact, if we look at the fundamental perspective, that is the factors behind the scenes which has been influencing the behavioral patterns in this market, you will see that the failure of price action to surpass that $82 zone since the beginning of the week. This is this zone right here. You can see it has been a strong selling niche since this week started. So the inability of price action to surpass or break out of this zone, coupled with the US dollar's rebound and an unexpected surge in the US crude and crude oil stockpile, may be hindering further upward movement in price action. Now, yesterday night we had this hawkish remark from the U.S. Fed Reserve policymaker, that is Wallace, who his comment boosted the U.S. dollar strength a little bit against other currency, potentially dampening oil prices as it makes this dollar-denominated oil expensive for non-US dollar holders, hereby reducing the demand for oil. Now, will this demand continue to reduce at this point? That's the question right now. So this descending trend line here is going to be playing a major role in guiding our decisions. If price breaks and breach this descending trend line, we shall be looking out for more buying opportunities at the breakout of the $81.70 level, and looking forward to adding more buy positions at the breakout of the $82.25 level. However, if continued selling pressure persists below the structure, where we see any form of reversal pattern here, we could be seeing price drop to the downside from here. Now, from the report yesterday from the Energy Information Administration, EIA, the U.S. crude oil inventory unexpectedly rose by 3.165 million barrels, reversing a previous decline of 1.952 million barrels. Now, this unexpected buildup in inventory further adds to the downward pressure on oil prices. However, in as much as the idea of selling is still in the air, we cannot ignore the escalating geopolitical tensions in the Middle East and between Russia and Ukraine, which is still heightening concerns about tighter global supply, limiting the downside of oil prices. So with this factor here, we need to have a balanced perspective to guide in our trading decisions today, as market participants will now closely monitor the release of the gross domestic product annualized for quarter 4 from the United States. And we are also expecting some other factors, since this is a US denominated asset, from the US economic docket to guide our decisions for today. So in light of this development, ensure all buy positions are closed, while we shall be using this descending trend line as a yardstick to guide our next move. I personally have a buy stop order which appears to have been triggered right now at the breakout of the $81.70 level, and of course be looking out for more opportunities to buy at the breakout of the $82.25 level. And if price goes ahead to continue, a further breakout of the $83 area will be welcoming more buy positions in this trade. So I encourage us all to mark out these levels, as we shall be needing them as a yardstick to guide any bullish idea from this juncture. However, if we get taken out of all our buy positions here, as price respects these descending trend lines and continue to find selling pressure below the structure, I'm of the opinion that a breakdown of our key level at the $81 area, and remember how that key level shares a beautiful confluence with that ascending trend line we spotted on the 4 hours time frame. Now, if price breaks down our key level at the $81 area, we shall be looking out for selling opportunities at the retest of structure to join the decline to the downside, and a further breakdown of the $80 mark will be welcoming more selling opportunities. So I would like us to mark out these levels on our chart. One, the descending trend line. A breakout of the descending trend line is welcoming buy positions for us. As long as price remains above the descending trend line, we feel comfortable in a buy position, while a breakdown of the $81 level will be welcoming selling opportunities, as price would have breached and broken that ascending trend line we identified on the higher time frame. So it's a simple setup we have here on the US All Spot. Ensure you move all your stop losses on the current buy positions while we wait for new opportunities to emerge. If you have any questions whatsoever as regards to this illustration, or you need some further clarifications, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys, and use that time to mark out these levels on your chart. All right, so I see a bunch of comments here. I can see you, Powell Khan. Good morning to you. And Powell wants us to treat Euro USD. Unfortunately, we will not be able to take on the Euro USD today, as we already have a bunch of assets we've been monitoring since the beginning of the week. So if you want us to treat any asset, like I usually say, try to be part of our Monday session, where you have the privilege of dropping in the comment section any financial instruments you want us to monitor for that week. So Powell can join us on Monday, and let's see how we can do this together. I see you, Mortis SLM. Good morning to you. Glad to have you around with us this morning. So in the absence of no further questions, I am of the opinion that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the USTech100, popularly known as the NASDAQ. And right here on the NASDAQ, we've had quite an interesting scenario since the beginning of the week. We've had sell positions at some point, we had buy position at some point, and then we saw our price action keep snapping back into our entry point, taking us out at worst case scenario break even, or some small profits at every point in time. An holistic view of this current structure reveals how choppy this market environment has been since the beginning of the week. As you will see, though the week started with a range bound structure between the 18,365 level and the 18,320, but has since expanded into the 18,390 and of course the 18,180 level to give us a very wide range bound structure. And whenever we identify a range bound structure on our chart, it's more or less a signal that the market is going through a level of indecision at that point in time. And this could be as a result of a couple of factors. One of them is the anticipation of the gross domestic product annualized for quarter four from the United States, and secondly, the core personal consumption expenditure, which is an inflationary gauge to give an insight into what is likely going to be happening as regards to the Fed's interest rate cut path for this year. Though the Fed chairman and other Fed policymakers have continued to emphasize that there is likely going to be a 75 basis rate cut for this year, and leading to 3 rate cuts, which surprised the market despite the high CPI data that came in months of January and February. However, market participants are still betting on a potential rate cut in the month of June, which is still giving some uncertainty to this particular market. So this week so far, we've not really done very well on the US Tech 100 as price keeps snapping back into our entry point at this point. Now, in our plans for this week, while we have market consolidating within a range, you will see that within the range, price action as one way or the other finding some series of lower highs, and this is evident after connecting the series of lower highs here. As you will see, we have a major descending trend line that will be guiding our decisions for today. And you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we shall continue to look out for patterns and structures that support the idea of selling this asset. Now, zooming into what has been going on here in the last 11 to 12 hours now, you will see that price action has been confined within a range. We have the 18,300 and the 18,250 level to emphasize the prevailing uncertainty as everyone is looking forward to the GDP data coming up later today. So I would like to mark out this range bound structure here, which is very, very important as it will help us to manage any expectations from this area. So we have the 18,300 level. What a psychological level we have there. So I will be labeling this. So we shall place this at the top right hand corner of our screen, right? And then we have, hold on a second, I think I should, then we have the support line of that range. Let me use my line chart here. Okay, so we have the support line of that range at exactly the 18,250 level, right? So we have a $50 range to work with ahead of the GDP data coming up later today. So I personally have already had a sell position triggered at the breakdown of the 18,270, as you will see here, though price is back into my entry point. So I'm still hopeful that price will continue to maintain that traction below that descending trend line. So I'm going to be holding on a bearish bias on this one, simply based on the fact that price action is still trading below the descending trend line. And if it goes ahead to break down the 18,220, I will be adding more sell positions and further sell positions at the breakdown of the $18,180 area. However, in as much as we're looking out for selling opportunities here, if it so happens today that price action breaches and breaks out of this descending trend line, then this will be the first time price action will be breaking out of this structure. So a breakout of the descending trend line will welcome bullish ideas. So in that regard, I'm having a buy stop order sitting above the 18,320, looking out for more opportunities to buy at the breakout of the 18,350 and the 18,390 to maximize the potential of that bullish move. So this is how we are going to be managing a bullish expectations here today. So you can see how crucial and important this descending trend line is, as it's going to be playing a major role in guiding our trading decisions for today. So I encourage us all to mark out that trend line right from Tuesday's trading session into today. As you will see, price has consistently respected it. We'll maintain a bearish bias as long as price remains below the structure, but a breakout and retest will welcome buying opportunities. So let's see how the market will play out here. So I will be back here tomorrow to give you an update, and let's see how we manage the positions. So this is my simple view on the US Tech 100 for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, we shall be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right, I see you, Buddha95. Good morning to you. All right, so in the absence of no questions, let's move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the newly introduced asset, the USDJPY. And as at this morning, we've had all our sell positions closed after sellers have failed to breach that key level at the 151.200 area, indicating a potential reversal setup as anticipated yesterday. Now, for those of us who missed out on our earlier editions. Let's look at this quickly and let's see what really happened at the beginning of the week that led to the decisions we made. We've had buys, a buy position at the beginning of the week, which lasted about 2 to 3 days before we got taken out of that position. And then we had a sell position yesterday and has since been taken out too as well. So let's run through the 4 hours time frame. Let's see what is going on the higher time frame. Now on the 4 hours time frame, after considering the character of price action in the last couple of weeks, it's glaring that price action has been on a strong uptrend situation, and we have a couple of ascending trend lines to buttress this fact. Now, something interesting happened during the course of this week as we saw price action for the first time in about 2 to 3 weeks broke down that ascending trend line to incite a bearish bias. Now, from a technical standpoint, we saw this happen, price breakdown, retest of structure, then we saw this engulfing bearish candle, bringing price back into the 151.200 area before we started seeing this consolidation phase happen. Now remember, our key level for this week is the 151.200 area, which has been a key determinant of price action since the 28th of March. And if we look at ever since price action broke above this key level, sellers have been finding it difficult to continue the momentum to the downside. As you will see here, every attempt by the sellers to break through has always been met with strong resistance from the buyers, which for me is a signal that buyers may be strong around this area, or we could be seeing an accumulation phase in an attempt to continue the uptrend move. So if this is going to continue, that is, sellers are finding it difficult to break down our key level, then we do want to be looking out for patterns and structures that supports the idea of buying this asset. Now, the only condition that will make us sell the USDJPY is the breakdown retest of the 151.200 to join that decline. So with this understanding we have here on the 4 hours time frame, let's scale back down into the 1 hour time frame, and this was what I was able to come up with this morning. So after a thorough digestion of this market dynamics, you will see here that since the new week has begun, you will see how this area has been limiting all attempt by the sellers to break through. So as a result of this observation, I was able to identify and label this zone as our demand zone for this week. And as long as price remains above this structure, it makes sense for us to look out for patterns and structures that supports the idea of buying. The only condition that will make us sell is for this demand zone to be broken to the downside. Now, zooming to what has been going on here in the last 24 hours, remember what we said here yesterday, that if it so happens that price action drops below the 151.625, we are going to be looking forward to see how the market is going to be reacting to the key level to determine what our next line of action will be. And if you remember, we said here that we shall be looking out for a reversal setup as soon as price action comes into the 151.200 area. Now, there's another interesting thing about the 151.200 area. Remember that at the beginning of the week, we had this descending trend line, which was guiding our trading activity for this week. And we saw how price broke out of that descending trend line. And from a technical standpoint, we expect that at some point price may come back, retest the trend line in an attempt to continue that uptrend move. Now, as you will see, as soon as price tested this area, we have been seeing some buy pressure, giving me this series of higher lows we have here. And in fact, I can see a reversal pattern on this point. So with the reversal pattern here, I want to be using the 151.430 level as the neckline of this reversal pattern, where the breakout retest of that neckline will be validating this reversal pattern for us to continue that uptrend move. So as it is right now, placing a buy stop order above the 151.430 makes sense right now, and then we shall be looking out for more opportunities to buy at the breakout of levels such as the 151.625, the 151.750, and of course the 151.900 area. So this is how we are going to be managing a bullish bias on this asset. So let's ensure that we be on standby to capitalize on that move. And stop losses will be right below this ascending trend line. So I suggested we give between 10 to 20 pips stop loss depending on the kind of trader you are. Now the renewed selling pressure we noticed here in the last 24 hours can be attributed to the Bank of Japan's dovish stance, and of course the hawkish comment from the Federal Reserve Governor Christopher Wallace yesterday, where he supported the idea of keeping interest rate higher for an extended period of time. In that regard, I still think that the path of least resistance for the USDJPY is looking to the upside. But if it so happens today that price action breaks down our key level at the 151.200 area, then we can now start considering selling. And I will not be selling unless I see a confirmation which would reflect on the chart as price retesting the structure, and then a further breakdown of the lowest point for this week at the 151.050 level will welcome more selling opportunities. So I encourage us all to mark out these levels on our chart for both the bullish expectations and the bearish expectations on this chart. So the key level at the 151,200, if price ever breaks down that structure, we shall be looking out for selling opportunities. So this is my simple view on the USDJPY for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So in the absence of no questions, I want to take this as a confirmation that we are all on the same page. So in that regard, let's move on to the final assets on our watch list for today. So the final asset we are looking at today is the XAUUSD, my favorite asset amongst them all, which is popularly known as the gold spot. And in fact, so far this week, we've done phenomenally well on this particular asset, as we have been buying this asset since the beginning of the week. And right now, price action is approaching the all-time high one more time again. Now let's look at the structure from the beginning of the week for educational purposes, and let's see what has led to the decision that made us to keep on buying this asset. So at the beginning of the week, remember, it was more of a range bound structure. As you will see here, price was confined within the $2,178.50 level, and the $2,164.50 area to emphasize the prevailing uncertainty in the market at that point in time. And when we have a range bound structure like this, we expect price to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, right here on Monday, after observing how it has become difficult for sellers to break through that support line at the $2,164.50 level, and then a couple of bullish candles around that area, gave us a red flag that we might be seeing a situation where price will continue to the upside. So immediately after observing this, we identified the 2169 area as an area we will be looking out for buying opportunities. And you saw what happened a couple of hours into the New York session on Monday. Price broke out the structure, and in fact, if you missed out on that opportunity, the market was kind enough, it came back to retest the structure as we saw price climb into the $2,200 zone. And on the path to the 2,200 zone, we were able to maximize that move by adding more positions at the breakout of the 2,178, the breakout of the 2,185, and the breakout of the 2,195, which did not do very well at all. But at the end of the day, we have an accumulation of profits during the second day of the week. Then we had this counter trend opportunity that happened. I told you on Monday that I wouldn't be joining that move, but those who feel comfortable with counter trend opportunity may want to join a decline from the 2,195, which I did consider to be a retracement phase of that impulsive leg that started this week. Then on Wednesday, we said here that if price, this bearish momentum drops, that as soon as it tests this ascending trend line, the appearance of a reversal pattern will be all we need to continue the uptrend move. And look at what happened here on Wednesday. We saw this whole consolidation phase between the $2,180.50 level and the $2,174.20 area, and the inability of sellers to break through this ascending trend line for us was a good signal that we are going to the upside. So we positioned ourselves above this $2,178.50 level yesterday. We joined this move. Then we added more at the breakout of the 2,190. And during our live session yesterday, I did mention that we move all our stop losses to secure the current position. And I think we mentioned that we are going to be moving our stop loss to that area around the 2,190. And though we got taken out of that position, but we were able to come back in as we had multiple levels yesterday that if price continues to climb, we have the 2,195 where we said we will be having our buy stop order. We said we're going to be adding more buy stop order at the $2,250 level. We also added more right here. So in the last 24 to 36 hours now, we've done pretty well on this asset, as this current buy position is scooping over 300 pips if you are taking only one position. And if you'd had multiple entries here, you will be running into about 700 pips in total on this particular asset. And for those of us who capitalize on these opportunities, well done and kudos to you. So at this point in time, if you still have your buy positions running, kindly move all your stop losses right now. Let's secure this current buy position as we wait for new trading opportunities. Now the highest level we have right now is the $2,114 area, so $2,214 area. So I encourage you to mark out that level. So we shall be looking out for more opportunities to buy if price action breaks out of this level. Now for those who still have a buy position, let's move our stop losses. Now the most appropriate area to move all stop losses right now is the $2,000 and $2,209.50 level. Anywhere around or below that structure seems most appropriate to move all stop losses to, as we continue to monitor price action from this particular area. Now, always remember that you do want to be given enough breathing space for price action to move around. So the momentum on the XAUUSD has been very, very strong, and in fact the absence of any form of significant economic event in the US yesterday led investors to continue to buy the gold asset amidst growing speculations of a potential rate cut by the Federal Reserve in June. However, it's now crucial to safeguard positions right now as we look forward to the GDP data coming up later today. And of course, we also heard of the hawkish remark from the Federal Reserve Governor, Christopher Wallace, yesterday night, where his comments dampened expectations of a rate cut, acting as a deterrent for safe haven assets such as the gold. Now, despite this, it's important to also note that the Federal Reserve recently signaled a less restrictive monetary policy and reiterated its plans to cut interest rate by 75 basis points for this year. Now, this stance restrains aggressive moves by US dollar bulls and provides some support to gold prices. Moreover, the geopolitical tension arising from the Russian-Ukraine conflict and the ongoing turmoil in the Middle East are likely to prevent significant decline in the price of gold. And for me, I still think that the path of least resistance for gold is still looking to the upside. Now, to guide our trading decisions for today, we still have our ascending trend line in place. Remember, we had this couple of ascending trend line which we identified at the beginning of this week, and this has been guiding our bullish idea since this week began. And you know how we use our ascending trend lines. As long as price action remains above the ascending trend line, we shall remain comfortable in our bullish bias. Now, in this case scenario here, as price action tests the 2214, there is a possibility that price could still come back. So if I see selling pressure here, I will not jump in, because it might be a retracement of this impulsive leg. So we are going to be looking at price coming into that area around the 2195 and the 2190 zone, where depending on how market participant reacts to that area will determine if we are going to be buying or selling from this point. So if we are going to be buying here, I would like to see a reversal pattern emerge from that area between the 2195 level and the 2190 area, where the breakout of the neckline of that reversal pattern will be enough for us to join that uptrend continuation. And these levels here will remain intact for us to maximize that potential bullish move if price drops and continues from that area. However, if price action breaches this descending trend line and breaks down that $2,190 level, then I want to be joining a bearish move to the downside. So the only condition that will make us sell today is for price to break down this ascending trend lines. And in fact, if we could see some beautiful signal that sellers are getting stronger, like series of lower highs and lower lows before the breakdown of that ascending trend line happens, we could be part of that move. But as it is right now, I have a sell stop order sitting below the 2190 while we exercise patience and wait to see how the market is going to be reacting to the structure. So please remember, you want to be protecting all your buy positions as market participants await the release of the US gross domestic product annualized for Q4 later today. So this is my simple view here. So this levels here still remains very much intact. So for bullish buyers, we are looking at price breaking out of the structure had a $2,214 area to join that uptrend move. But if bearish bias happens here and a retracement leg happens, then we shall be looking out for buying opportunities around the 2,195 and the 2,190 to join that uptrend move. But if a breakdown of the 2,190 happens, then at that point, we want to feel comfortable joining a bearish move to the downside. So this is how we are going to be managing our positions on the XAUUSD for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions or you need some clarifications whatsoever, feel free to let me know in the comment section below. So as usual, I will take the next 10-15 seconds off to see if there are any questions before we move on to round off on today's technical analysis session. See you soon, guys. While I encourage you to use that time to mark out these levels on your chart. All right, so in the absence of no question, okay, I see your comment, Miraculous04. I hope you are part of the XAUUSD session. We just attended to the XAUUSD and we've had simple setups to guide our decisions for today. So ensure you mark them on your chart. So in the absence of no questions, I think we have come to the end of today's technical analysis session. And in fact, we were able to attend to all of the 4 financial assets on our watch list for this week so far. And in that regard, we were able to take on the USOILSPOT, the USTech100, the USDJPY, and of course the XAUUSD, where we were able to identify simple trading setups to guide our decisions for today. So I hope you marked out these levels accordingly on your chart. If you have done so, well done to you, kudos to you. So all we need to do is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place to mitigate and protect your portfolio. For those of you who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you to independently make your own trading decisions. So it's on this note, I want to wish you all the best of luck. I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and of course prepare for the core PCE coming up tomorrow, another major event that is going to be bringing some volatility into the market. And don't forget, tomorrow is the last trading day of the week, where market participants are expected to start rounding off their trading activities ahead of the weekend, and this will definitely bring some liquidity into the market, and we do want to be on standby to capitalize on that move as well. So hoping to see you guys tomorrow, same time, as we will be continuing to monitor price action. Do have a wonderful evening, everyone. Trade smart, trade consciously, and see you all tomorrow. Bye bye.